over the world, governments are faced with global uncertainty, new fiscal pressures worsened by high and growing debt burdens, and tight fiscal space with inability to raise taxes for an already overburdened populace. All these as they seek to give citizens a better life. Our focus today is on Kenya and the UK, where the finance ministers have recently made statements. Indeed, the futility in winning economies out of debt has become the common feature in budget statements. Many, like Kenya, are running out of buffers for even a mild shock, and no room to raise taxes without hurting growth, as we see unemployment in Britain rising as the national insurance hike takes effect. Plus, old tools like monetary easing are less effective in an environment with more supply-side issues. Israel has initiated Operation Rising Lion, a series of preemptive military strikes aimed at Iran's nuclear facilities and military leadership. Prime Minister Benjamin Netanyahu said the actions were needed to counter an existential threat of a potential nuclear attack from Iran, as top military figures were also eliminated. The Israeli Prime Minister says the operation will continue for as many days as it takes to remove this threat. Iran has already launched over 100 drones in retaliation as geopolitical tensions escalated. Crude oil prices soared, gold rallied, and U.S. stock futures sank as markets early this morning digested the news of the attack. Brent crude surged by more than 10% in early trading as traders priced in a risk premium from potential major supply disruptions in the region. Gold prices also rallied as investors moved into safe haven assets amid the mounting geopolitical risk. U.S. treasuries and dollars also rose, and Japanese yen and Swiss franc rallied. High oil prices also has implications for inflation, as the situation looks unpredictable and we can expect volatility to also spike in the coming days. Brent was over $74 a barrel in early morning trade. The US warned Iran not to attack US personnel, as this was a unilateral Israeli strike. Hello, welcome back to Global Business Insights, where we take a closer look at the main business headlines moving markets all over the world. Our deep dive is on the UK economy and some of the financial issues. In a blow for the UK Chancellor, Reeves, just a day after her spending review, Britain's economy shrank at the start of the second quarter. UK gross domestic product sank by 0.3% during April, also the biggest monthly drop since October 2023. This was lower than estimates for a 0.1% contraction and follows a 0.7% expansion during the first 3 months of the year. Headwinds faced by business in the UK included hikes to national insurance contributions and increases in the minimum wage. April also recorded the largest monthly fall on record in goods exports to the United States, with decreases seen across most types of goods following the recent elevation of tariffs. Reeves on Wednesday allocated extra money for the NHS, defense and housing. Day-to-day budgets will increase by 2.3% in real terms across the period, with defense and health spending receiving big boosts. But others, like the Home Office, had their budgets cut as Conservatives accused Reeves of a spend now, tax later review. The Chancellor is hoping that the extra spending would deliver security, economic growth, and an NHS fit for the future. Critics argue that the extra spend is unlikely to avert what looked like the start of decline for the UK economy, as spiraling costs and intensifying global uncertainty are also set to slow down growth. Opening the wallet on fiscal spend may be helpful. The Bank of England is also likely to further cut rates. That is next week, Thursday, when it meets in response to the economic contraction print. Analysts are worried that growth forecasts are optimistic, and this could mean a future fiscal hole may have to be filled with higher taxes, which will further complicate growth prospects. To be fair, Reeves inherited a tough fiscal deal, and she has been able to review the fiscal rules to give more room to avert an austerity-driven economic dip. Already recently, she has been forced to walk back some cuts to benefits, and political pressures may lead to more of walking back. For a while, the UK, worsened by the pandemic and weak post-pandemic recovery, was seen to have a productivity problem, which is not unique to the UK. If you look at GDP per hour worked in the UK, it was behind France, Germany, and the United States, and still decreasing. Investments in the right sectors also help productivity. Instead, we have seen the government and businesses under-investing for several years. Innovation is another engine of long-term growth in productivity. UK investment in R&D is also relatively low compared with global levels. Investing in education and skills also helps productivity. New growth plans need time to yield results. We have seen much political flux amongst the Conservatives, and now we have a Labour government more worried about holding on to power after a weak show at recent local elections. Not the best background to push long-term growth narratives. The consensus is that it could get worse before it gets better, as the UK courts investments and business in a tight fiscal situation, which makes it difficult to incentivize growth. The answer, beyond tweaking the budget, will be from game-changing solutions that convince and encourage more capital flows, more private sector investments, and incentivization of innovation and productivity improvements. Now to more business stories. Shares of Boeing plummeted 8% ahead of market open, actually closed about 4.79% yesterday in US trading after an Air India aircraft carrying 242 passengers crashed minutes after taking off from India's western city of Ahmedabad. The plane was a Boeing 787-8 Dreamliner, one of the most modern passenger aircraft in service. Our thoughts and prayers are with the hurting families. US stocks wavered after the release of softer than expected inflation data, and as the US and China reached a preliminary trade agreement. Latest US CPI rose 0.1% in May from April, less than the 0.2% estimated, while core CPI, which strips out volatile food and energy prices, also increased 0.1%. Less than expected. Yesterday, US May producer prices rose 2.6% as inflation pressures remain mild despite Trump tariffs. Still in the US, Micron Technology said it plans to expand US investments in domestic memory manufacturing to about $150 billion and in research and development by about another $50 billion. The additional investment includes building a second leading-edge memory plant in Idaho and expanding an existing facility in Virginia. China was reported to have officially removed all tariffs on goods from 53 African countries in a move that is expected to significantly strengthen trade ties between Beijing and the continent. Meanwhile, looking at the competition for Africa, the US announced that it will host the third US-Africa Leaders Summit this September in New York, just ahead of the United Nations General Assembly. And still on Africa, Kenya's finance minister presented a budget yesterday aimed at boosting revenues to service debt ratios while avoiding tax measures that triggered deadly protests. Kenya has been struggling to narrow the fiscal deficit and manage a heavy total debt to GDP ratio of around 2/3.
Mr. Speaker, the economy is expected to sustain growth momentum in 2025 and 2026, with the growth projected at 5.3% per year. And Mr. Speaker, this growth outlook is premised on a stable macroeconomic environment over the medium term. To foster macroeconomic stability, the government will continue to uphold prudent monetary and fiscal policies, ensuring that our actions remain aligned with the evolving needs of the economy and of the Kenyan people. As part of the process, the government will work to ensure that inflation remains within the targeted range, maintain a competitive exchange rate to the dollar, and deliver stable interest rates. Fiscal policy stance over the medium term will continue to support the government's priority programs under better through a growth-oriented fiscal consolidation path. And as such, the fiscal deficit is projected to decline from 5.3% of GDP in the financial year 2023-24 to 2.7% of GDP in the financial year 2028-2029. Mr. Speaker, Kenya's economic outlook faces both external and domestic risks. Globally, trade tensions, financial market volatility, and geopolitical conflicts could reduce Kenya's exports, tourism, and remittances, as well as raise costs of essential commodities. In the domestic scene, extreme weather may impact agriculture, infrastructure, and food security. The government is monitoring these risks closely and will take necessary action and measures to safeguard macroeconomic stability. Mr. Speaker and honorable members, let me now expound on the policy, priorities, and structural reforms that the government is implementing to sustain economic growth and improve livelihood of Kenyans. The priorities are under the bottom-up economic transformation agenda. Mr. Speaker, as I have already affirmed earlier in my statement, government's initiatives under better over the last 2.5 years have resulted in significant successes, notwithstanding a challenging domestic and external landscape. Over the medium term, the government will consolidate the gains already realized to stimulate sustainable economic recovery for improved livelihoods. Towards this end, the government will continue to implement policies, programs, projects, and the interventions geared towards 1. Bringing further down the cost of living, 2. Ensuring food security, 3. Creating jobs, 4. Expanding the tax base, 5. Improving foreign exchange balances, and finally, fostering inclusive growth. Priority will be given to attracting strategic investment across Better's 5 core pillars and their enablers, using a value chain approach to enhance production and add value and improve market access. This will be supported by a whole-of-government approach to service delivery. Mr. Speaker, the government will also implement the following interventions to support and accelerate economic recovery. First, continue to uphold macroeconomic stability and strengthen security to ensure a safe and supportive business environment. Second, accelerate the development of key infrastructure, including roads, railway, energy, and water systems to lower the cost of doing business and ease the movement of the people and goods. Third, boost investment in key economic sectors to drive broad-based, sustainable growth by advancing agricultural transformation, strengthening manufacturing, promoting environmental conservation and climate change mitigation, revitalizing tourism, and ensuring sustainable land use and management. Fourth, strengthen human capital development by increasing investment in health, education, and targeted social safety nets for vulnerable populations to achieve both social and economic outcomes.
Asia-Pacific markets were lower as Israel conducted a military strike on Iran targeting its nuclear program, and Iran retaliated with a drone attack, escalating tensions in the region. European markets and US futures also on the back foot. Well, that's all we have time for on this edition of Global Business Insights. Thanks for watching. This is Bode Shosanmi.